I mean, are markets around the world only looking at a bit of a relief bounce because markets have been oversold? Because technically, we don't have too many clear positive statements. There's just a lot of rhetoric and a lot of, communication and miscommunication happening from both sides right now, but no hard evidence of the Strait of Hormuz opening.
Yeah, good morning, Surbi, and good morning to all the viewers. Definitely, there is a lot of noise which is possibly correct or incorrect hovering around and impacting market movement and sentiments. But one thing which I have understood over the last 3, 4 days is that initially, when the war happened, the idea was clear that Iran want to make sure that the oil prices skyrocket. And that was the way they could have hit on other allies of US and other countries. But at least in the last 2, 3 days, the communication which is coming from Iran is basically indicating that like they are okay to make the oil move for countries which are not part of it. And if that happens, crude prices going disproportionately higher goes out of the window. So for a country like India, as long as things stays below $110, at least for a month or so before things stabilize, we will be pretty okay. Because if we go above $110, then we possibly have to see retail prices hike for gasoline. And obviously, it will have an impact on CAD and your inflationary data. If you see our inflation data as well as your trade deficit, which came yesterday, there is a clear cut inching up, right? Our trade deficit came at almost $27 billion compared to almost half of it a month back. So if situation goes above 110, things will definitely make worrisome for India. But being an optimist, I believe about the language which is coming out, and if we abide by that, there is possibly that we are inching out of that risk of crude going disproportionately higher. And that is what market taken have cues yesterday and possibly what we will see today also. That there will be some kind of relief rally before it does settle. We are not saying things are out of the woods, but these are definitely some positive bites for bulls to take care of.
Okay. All right. So for the time being, the bulls are grabbing this opportunity with both hands. Ajit, morning to you. So what's the trading bias? Continue to play for an upward bounce or short the bounce?
Yeah, good morning, Surbi. So, Surbi, yesterday, definitely in the latter half, the rebound was sharp, and we saw that the heavyweights, especially from the banking part, which were extremely oversold, participated in the move. So today also is going to be critical that how the banking index performs. Because if you talk about the other sectors, IT was under pressure, energy counters slightly were sluggish. So the the role of banking becomes crucial then. And plus today we have the weekly expiry also 23,500 is still a call writer zone. So we need to see whether we manage to surpass that area in the initial trade and hold. Then probably we may see a further recovery. But positionally, in case if somebody is looking at the market, still we need to see a clear sign of a base formation or a reversal. So until we do that, I feel still a sell on rise market, considering that the crude is again hovering around $103 after the marginal dip, and VIX is still holding around 20 mark. So these indications are still not very favorable. And plus, if you see the rebound, the US market, that was also not very decisive. So I doubt that they can sustain at the higher levels after this recent decline. So majority of the indication positionally are still on the negative side. But yeah, in case if there will be any relief rally, rebound, participants should look for reducing their position, especially if they are sitting on a long side, and wait on the sidelines to see for any confirmation of trend continuation.
Okay, all right. So that's going to be the approach. In terms of the up move that we saw yesterday, Ajit, it was a very wide up move, right? A lot of stocks were recovering. Banks also managed to see a big relief rally. Finally, the Bank Nifty also got out of the clutches of the bears. Do you expect to see that up move continue on banking stocks and any specific trades here, either on the bank index or on individual banking names? NBFCs, banks.
So private banking majors, particularly HDFC Bank, has rebounded from a very critical support zone. Close around 800 was the zone basically where last time the HDFC Bank, formed a base and then it rebounded. And that also coincides with the zone close to around the weekly 200 days of exponential moving average. So it's a very critical zone to watch out for. And especially that we were seeing the underperformance from the private banking majors earlier also when the banking index was holding strong. So we feel that it's a good opportunity to start accumulating some of the private banking names like Axis, ICICI, SDFC. PSUs, I believe that they might continue to trade with the sideways bias after the strong outperformance, though we have seen a decent rebound in some of the PSUs name also yesterday. But volatility is likely to remain high in the PSU pack. So it means private banking major is something that you should be focusing on. Among the NBFC basket, I still feel that there will be a possibility of further consolidation or maybe profit taking on the higher levels because the pace of decline was comparatively lower within the NBFC space. So we might see further consolidation before any meaningful recovery.
Okay, all right. So more consolidation perhaps, lined up ahead. Aishwarya, very quickly on bank stocks or on large NBFCs which have been really pummeled in the last couple of days. Any buys?
So I believe, some of this banking stock has been better in expectation of slowdown in GDP and things like that. And you see HDFC Bank and ICICI has gone down 15-20% since this thing started. And if you see operationally, things hasn't deteriorated at all. Indeed, credit growth has picked up. And if you really look at PSU banks in the last 4 months or so, what we have heard meeting a lot of this managements, the focus on growth is very high. They actually been very, very competitive and giving tough time to private banks also. So the whole pie of credit growth is inching up. Deposit mobilization is also gaining a lot of strength. There are some pockets of MFI because of the state election. There's a worry over there. But if this gas thing doesn't deteriorate further, we don't want to see even a credit risk inching up. So we believe BFSI giving an opportunity in that space currently. And I will stay more with private banks as of now because obviously we know that PSU has a large share of treasury income, which is more volatile as we see the yield moves things around here and there. But definitely we believe that BFSI allocation both to private banks as well as large NBFCs like Serum Finance, which is a part of our portfolio, and other players can create alpha at least from next 6 month to 1 year perspective.
Okay, all right. So there you go. Some thoughts on bank stocks. By the way, we have a couple of people viewers joining us on our YouTube feed as well. Narendra, good morning. I think you've already got your answer. Bank stocks, you've heard it from both the guests. And Sai Bharadwaj was asking about the Bank Nifty resistance. Again, you got the trades with Ajit. Ajit, if you could just recap the levels specifically on the Bank Nifty. Which are the next set of hurdles that the index will have to cross to ensure that, okay, we can say that this bear trend, at least for the time being, seems to be reversing?
So, Surbhi, last time when we tested this zone close to around 53,400 mark, the zone was coincides with multiple supports. Means we have the 100 days of exponential moving average on the weekly chart, the last neckline area of the previous consolidation zone. So both levels, though we have penetrated that mark briefly intraday, but we could manage to hold that area. So as long as we are holding above this 53,400 mark, possibility of consolidation followed by a rebound is high. On the higher side, 55,000 is still a call writer zone. So the moment we surpass this, then probably it might trigger further recovery or short covering trade, which can help the banking index to inch toward 55,700, 56,000 levels. So as of now, banking looks comparatively better, if we compare it to the Nifty, and 53,400, that should be the stop loss in case if you're carrying longs.
Okay. All right. Got that point. Let's do one thing. We have more questions coming up on YouTube and we will keep addressing our viewers' queries. But for the time being, let's also talk about the key stocks that are going to be in news today. Plenty of order wins and some other announcements as well. So let me run through today's list. So GMDC is the first one that's going to be on our radar today. The company has signed an MOU with the NMDC to explore strategic collaboration in the rare earth element sector. So keep GMDC on your radar. The other one that we'll be putting in the spotlight would be RVNL. The company has bagged orders worth about 95 crore rupees from NMDC, so that's going to be on the list. L&T Tech has launched something in partnership with NVIDIA. It's an NVIDIA-powered AI lung digital twin platform. This is for investigation of advanced respiratory diseases for diagnostics. So let's see, it's an NVIDIA partnership-led launch, so we'll see if the market is getting excited about it or not. There is Sun Pharma, which is going to be in the spotlight as well. The US FDA has accepted the application for Illumia. This is the SBLA application, which is Supplemental Biologics License application for this particular drug, which is used for the treatment of adults having psoriatic arthritis. So it's an arthritis drug, and it's a pretty big one. Sagar Cement is going to be on the radar as well. It's selling a little over 7% stake in Andhra Cements. We're expecting that OFS to go through today. So let's wait and see how that big deal, plays out. Tata Motors has announced a price increase of up to 1.5% on its commercial vehicles fleet. This is going to be effective from the 1st of April. So worth keeping that on your radar as well. And finally, speaking of order wins, Power Mech bagged a large order, 709 crores, almost 710 crores. And this order came in from Adani's for infrastructure management services. So keep Power Mech on the radar as well. And then there's alkyl amines. Some of the disruption because of this West Asia crisis continues to impact companies, and alkyl amines is one of them. It has temporarily suspended manufacturing of methylamines, ethylamines, and their derivatives at 3 of the company's sites because of the force majeure that has been declared. And finally, Bajaj Electricals has acquired the Murphy Richards brand rights worth about 141 crore rupees. So that deal has concluded as well. So it will be interesting to see if there's any reaction on the stock. So plenty of names on the list over here. Going back to our experts here, let me ask you about auto names, Aishwarya. Tata Motors, I don't know how much of this price hike really helps sentiment, at least for the CV side, Tata Motors CV. But even otherwise, every part of auto came under serious thrashing in the last couple of days. Would you be using these lower levels to buy into anything? And a specific call on Tata Motors CV?
So obviously, auto sector is one which has been impacted the most. If we see majority of stock, whether it is Mahindra's, Maruti, Tata Motor, PV, CV have gone between 15 to 20% decline. And the reason is obviously the rising crude prices, the impact of it, the uncertainty around interest rate and things like that. Specifically to Tata Motors CV, where we have seen this price increase, it is basically to mitigate the impact of raw material price increase. If we have seen in this YTD, majority of HRC prices and other steel prices have gone up 15 to 20%. And the idea over here is to mitigate that and not to lose market share on account of the price increase. But having said that, we believe, Auto Inc. and Auto OEM both are providing opportunities in the whole space. Even players in two-wheeler space, players like TVS Motors and Mahindra have gone down 15-20%, where if you look at the monthly volumes and other numbers, there has not been a dent. So we believe, the valuations which were obviously a bit stretched are coming back to senses. And once we are out of this whole thesis, at least say 2-3 months down the line, we will definitely see this catch up on account of the improvement in their operational performance. Only thing I'm really worried about is how the metal as an commodity does, and it will have an impact on Auto Inc. and Auto OEM. And if you have seen, both aluminium and steel prices has been on an upward trend. And things doesn't settle, that will have definitely an impact on operating margins. But I think the stock prices have taken adversely the sentiment much more pronounced than what the impact on margins will be. And that's why we believe there's an opportunity in the auto space to create wealth in the coming times.
Okay, all right, got that point. Actually, since we're talking autos, we've got some more questions here. Shyam is asking, morning Shyam, he's asking about Tata Motors passenger vehicles. We just discussed CV. He's talking about PV as well. Shyam, I'll take your KPIT question maybe a little later. Let's talk about Tata Motors PV. Let me ask Ajit as well. Ajit, technically, after this fall, which auto stocks, and now this is a question not necessarily for very short-term trades, but someone who wants to at least keep the stocks in the portfolio for slightly longer, at least a couple of weeks, a couple of months. So does Tata Motors PV, because our viewer here is asking, is it a good time to average? And Tata Motors, at least the PV side of it, it's really been hit horribly hard last couple of, even before the war. I mean, this is going on for the last couple of months now. So is there any sense in averaging Tata Motors PV? And other than that, from a portfolio addition perspective, is there any auto stock that you will pick right now?
So Surabhi, first of all, Tata Motors PV was, like you rightly mentioned, that was underperforming earlier also, while the auto index was hovering around the record highs. It was hovering around its 52-week low with hardly any sign of recovery or rebound and It didn't participate much even during the strong recovery phases also. So I feel that when the stock was anyways underperforming, and especially when the market situation deteriorates further, especially with the sharp cut in the auto index last week, this Tata Motor PV have in fact breached this crucial support on the weekly and monthly charts also. So there's no point like adding to your loss making position. Instead, stock like M&M, TVS, Eicher, the top performers from the auto basket is something that one should look to accumulate on dips. As you rightly mentioned, that short-term bias might continue to be lackluster, and there could be a possibility of 3 to 5% of more decline from the current levels. But in case if somebody is looking for medium to long-term perspective, they can definitely look to add the outperformers like M&M, Eicher, TVS with a 6 to 10 month kind of a time horizon.
Okay, all right. By the way, I must point out that some of the markets, because in general, tech stocks in the US did really well, and we've got this commentary from Jensen Huang. Some of the Asian markets, like the Kospi, by the way, is up 2.5% today. That's the extent of gains coming through. And we've started getting our pre-open rates. The first of them are on your screen. So we'll just we'll keep flashing the rates, let them settle. Right now, the Nifty in the pre-open session is suggesting a 300-point gap up. Let's just wait for it to stabilize. Aishwarya, now suddenly, I think the market was just getting bored of the war. It's focusing now on AI and Nvidia all over again, also because of Nvidia's event yesterday, and a lot of bullish commentary coming in from Jensen Huang. Now, typically in the past, when global markets get back on the AI narrative, Indian IT stocks actually suffer. So I don't know, I mean, if you want to draw those correlations today, but there are viewers actually asking about tech stocks. Someone was asking about KPIT specifically. What is your advice on IT, given we have to evaluate everything? The market is still uncertain. There's still a war going on. IT stocks have been thrashed. But yes, there is the very real AI disruption threat as well. So would you buy anything at all? And if you could give our viewer a specific call on KPIT.
Yeah, so obviously, IT was hammered even before we entered the war, all thanks to AI and this disruption on the revenue deflationary thing. But what I believe from here onwards, the valuation of IT has come to very, very attractive levels. And if I really see the numbers for the last 3, 4 quarters, we haven't seen any kind of a data point where we will have a point of worry. Indeed, if I want to remind all the investors that players like SCL Tech and Infosys actually upgraded their number, right? We have seen recently Happiest Mind came out and said that they will possibly grow higher, more than 10%. We saw that reaction on the stock prices. If you look at a global side, there is no, warning from guys of Exchanges or Cognizant. Indian Oracle came and said that the growth will be much higher. So what I'm saying is that the opportunity return on IT is possibly exaggerated. We will possibly see decent growth for the Indian IT players. The AI impact will be there, but it will not come and hit us very hard. It will be very gradual, and Indian IT will adapt to it. So that's our call. So that makes it a very, very compelling bet that majority of these Indian large IT players are building in a growth of not more than 1.5%, 2%, right? Where they can easily do 4 to 5% kind of a growth for the foreseeable future. And in that case, the valuations makes a very, very, I would say, interesting level. If you look at Infosys, TCS, they are trading at 15, 16 times PE, which is almost lower than the last 10-year historical level. And if you see the beautiful part of it, especially mentioning KPIT, if you look at the bottom part, mid caps and small caps, I believe their ability to maneuver and grow is much better, and their ability to adjust around this whole AI saga will be much easier for them to play around. So I believe mid cap IT, especially players like Persistent, or possibly to an extent Emphasis and players like that, can get that growth going and adapt to that AI thing. Specifically on KPIT, it's more to do with auto and auto play, and I believe KPIT will do well once we will see that the whole this risk of sentiment globally take a backseat, And that will be a travel. So it's similar to if you go for Coforge, travel is a large part of it. Like KPIT Auto has a large part to it, and both of them will see much respite coming to them once we see these geopolitical things taking a backseat. But for other IT players, I believe the time is now. To want to go and invest, cherry pick those stock, whether large cap, mid cap, and if you have a 1 year view plus, possibly this defensive bet can create much better alpha for investors. And last but not the least, I believe the recovery in IT will be very swift. Even if yesterday we saw a guy like Persistent show a very sharp turn in market recovered. So watch out on that piece.
Okay, so Aishwarya is a little optimistic on IT. By the way, the pre-open session has settled. So let's take a look at the final race and then get today's day trades with Ajit. So now the Nifty is suggesting that we'll probably start up somewhere around 100 points. That's the indication. And if you take a look at stocks that are leading this up move, at least right now, Hindalco, Bajaj Finserv, HDFC Bank, there is Tech Mahindra, there is Axis Bank, BEL. So it's really cutting across sectoral lines. Sun Pharma, Geo Financial, lots of names, different names. These are all the Nifty gainers at this point in time that I'm pointing out. So yeah, those are the gainers coming up. You have a fair amount of metals, some banks on that screen, some IT on that screen as well. On the flip side, not too many stocks actually down. Maybe a Kotak Mahindra Bank and Lever at this juncture, slightly soft on the losers tally. 80 points up on the pre-open session. Some of the other stocks on the gaining screen include something like WeWork India, Kalpatru, Keystone Realtors, Bejel Projects, which was up 20% yesterday after that order win, is still going strong in the pre-open session. It's up about 3.5% again. So those are some of the stocks. We'll keep flashing the gainers and losers for you on the mid-cap screen as well. Ajit, so now that you've seen the pre-open session, what's the call? Let's go back and revisit the index trades, Nifty or Bank Nifty. Is there a trade? And otherwise your stock trades.
This will be like what we have discussed at the beginning, that 23,500, the call writer zone. So we are opening below that mark is what the indications are. So probably, we might see a lackluster trade, means around that area, we might again see profit taking coming in. Cause today being the weekly expiry, the call writers might continue to hold that area. And probably close to around 23,200, 23,100 mark, we might get a buying opportunity as well. So broadly play this range, so closer to around 23,500, one can look for shorting opportunities as well, with 100 point as a stop loss. Now coming to the stock specific views, energy as a basket definitely looks promising to us. Means if you exclude the OMC part, rest of the counters are definitely showing, especially the power names, strong traction, continued traction with volume. So Coal India is one such name. Where after a strong up move, there's a marginal dip. So one should consider this as a buying opportunity, considering this overall bullish structure. And 478 is what we are eyeing as the immediate target, with stop at 445. At the same time, do maintain few shorts also. So while the pharma basket looks okay to us, Cipla is underperforming within this space. The stock is set for a fresh breakdown after a very tight range of consolidation. So where we see a potential of further decline towards 1230 area. So here one can go short with 1340 as a stop loss in Cipla.
Okay. All right, Ajit. Finally, before we let you go, just going back on that IT question, because a lot of our viewers are still asking about it. Mid cap IT. I'm seeing Harshraj saying Zensar Tech, Saxoft, any of these stocks that can be bought. Anything on IT, even short term trades, large cap or mid cap.
Yeah, so TCS is retested its very major supports close to around 2400 mark after this sharp decline, and the Nifty IT index also Surbhi looks extremely oversold. So we are seeing a strong divergence here. Also, there could be a possibility of a rebound. So if somebody wish to play a recovery trade, then TCS definitely looks okay to us with 2550 as a target zone, with 2380 being the stop loss.
Okay. All right. Got it. Thank you very much for that, Ajit. Have a good trading session, and thank you so much for all the trading advice that you have given our viewers today. Thank you. Well, since we were talking IT, I just want to reiterate that a lot of this optimism is really stemming from the US. We had the NASDAQ do fairly well last night. It was the best performing US index, 1.2% up. And there was this event, the NVIDIA GTC conference, where Mr. Juan Jensen again gave some pretty big targets. He said that his chips, the latest ones, that is Blackwell and the next series, it could be fetching the company almost $1 trillion in revenue by 2027. Take a look.
Last year, at this time, I said that where I stood at that moment in time, we saw about $500 billion. We saw $500 billion of very high confidence demand and purchase orders for Blackwell and Rubin through 2026. I said that last year. Now, I don't know if you guys feel the same way, but $500 billion is an enormous amount of revenue. Not one impressed. I know why you're not impressed, because all of you had record years. Well, I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
Well, when Jensen Huang says he'll be earning $1 trillion in revenue, that is NVIDIA, the world listens. And that's exactly what's happened. A lot of Asian stocks, tech stocks that is, and chip-related stocks, very, very excited this morning as well. Aishwarya, okay, let's come back. Let's come back to our screen and our markets. You know, a viewer has been asking about L&T. Again, stocks that have been absolutely battered and bruised, out of shape. And the thing is that in this fall, a lot of people would have bought L&T, but they've then had to deal with lower and lower and lower levels because the fall continued on the stock. Your thoughts on where it is right now, whether it should be accumulated, and what kind of time horizon are we looking at in terms of making good on this investment? Because it is, I mean, the reality is that it is exposed to West Asia, and we don't have an end date in sight just yet to the war and the hostilities.
So, if you really look at market now is not really focused on war, it is more focused on oil prices, right? And if we get clarity on how oil prices moves, looking at the intention of both Iran and US, the recovery in the global market, including India, would be swift. Having said that, this will be more sector specific, right? Obviously, Larsen, which has a higher exposure to major part of his order book, or both and as well as execution, has an exposure to Middle East, but that uncertainty over that Middle East can sustain further, even if the crude prices goes down. That is very, very critical. So what I understand is, that the most majority of the investors want to play the rebuilding thesis of GCC countries, where Larsen would be a big contributor, but it can at least play out little late. It might happen 6 months, 1 year, or even 1.5, 2 years down the line. So, I don't believe that this war-related activities will settle anytime soon. And if that happens, we will possibly see a couple of quarters of tough numbers for Larsen, and even order book shrinking, and market is still will react to those numbers when they hit the screen and all of that. So I would tell investors to go slow on adding a Larsen at this juncture. That even if the market recovers, L&T recovery would be a bit let back, and the uncertainty will be there in the GCC. I would rather play more of industrial exposure, which are more developed, exposed to India as a theme. Obviously Larsen obviously has a large play in India, but more specific to India, because if you really look at the order book, if you look at, actually should be a lot of management which I have met over the last 1 year. Say there were 60, 70 management companies which I have met. I would say 95% of them, when they talk about the expansions, the capex that they're
Sure.
talking about, is significant. And let's play that story through a lot
Sure.
of these players in India, which is what can make wealth for investors.
Okay. All right. Aishwarya, thank you very much for joining us today. Good to have that advice. I hope you have a good session today. And let's see if the market is going to be a little charitable to the bulls. At least yesterday they got some green. And the start right now is on the positive side. Thanks for being with us today. Okay,
Hope for the best. Thank you.
so we are